gentlemen, good day and welcome to the Q2 and H1FY26 earnings conference call of OCCL Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Akshat Goenka, Joint Managing Director of OCCL Ltd. Thank you, and over to you, sir.
Good morning and a very warm welcome to everyone. Along with me, I have Mr. Anurag Jain, Chief Financial Officer and SGA Investor Relations Advisors. We have uploaded our results and investor presentations for the quarter and half year ended 30th September 2025 on the stock exchanges and company website. Hope each one of you had a chance to go through the same. The imposition of anti-dumping duties on China and Japan has improved our domestic realizations. However, the impact is muted by increase in raw material prices. The insoluble sulfur market continues to be stable. However, global realizations remain under pressure due to oversupply. The long-term outlook for the industry remains strong, supported by structural growth in the global tire sector and increasing demand for high-performance, environmental compliant products. While we expect near-term realizations to stay soft as supply currently exceeds demand, we remain confident in our ability to navigate these short-term challenges. At the same time, rising sulfur prices have emerged as a cause of concern. Over the past few months, benchmark sulfur costs have seen a steady uptrend driven by tight supply and stronger demand, putting pressure on input costs across the industry. The recent move by the United States to impose a 50% tariff on imports from India has also impacted our margins to the effect of the quantity that we are supplying there. Though we are hopeful that this whole tariff situation should get resolved soon. The Indian tire industry continues to demonstrate healthy momentum supported by robust demand from both OEM and replacement segments, especially post-radialization. Overall, the medium to long-term outlook for the Indian tire industry remains positive, backed by steady automotive demand and improving economic activity. To conclude, with a strong R&D foundation, a highly cost-competitive manufacturing base, and the recent imposition of anti-dumping duty providing a favorable market environment, we remain optimistic about our growth trajectory. We are confident that our continued focus on operational efficiency, product quality, and sustainability will enable us to strengthen our market position and deliver consistent value to our stakeholders going forward. Now, I would like to hand over the line to Mr. Anurag Jain to update you on the financial performance of the company.
Thank you, Akshat. I will now take you all through the financials of the company. Total income for Q2 FY26 stood at rupees 121 crores compared to rupees 104 crores in Q2 FY25, a growth of 16%. EBITDA for Q2 FY26 stood at rupees 20 crores against rupees 90 crores in Q2 FY25, a 5% year-on-year growth. The EBITDA margins were 16.8%. Profit after tax for Q2 FY26 stood at rupees 9 crores as compared to rupees 8 crores in Q2 FY25, a 16% growth year-on-year. PAT margins stood at 7.2%. Total income for H1 FY26 stood at rupees 244 crores, EBITDA rupees 47 crores, EBITDA margins 19.2%. Profit after tax for H1 FY26 stood at rupees 22 crores and margins at 8.9%. Total debt position as on 2025 stood at rupees 81 crores with long-term debt of rupees 26.5 crores. That's it from my side. You may begin the question answer session, please. Hello? Hello?
Hello, should we open the floor for Q&A?
Yeah, please do that.
Okay. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Concall from Alpha Alternatives. Please go ahead.
Hi, sir. Am I audible?
Yes, you are.
I wanted to understand how much is the global demand in terms of tons and how much is the supply. We are approx to 9% of global markets and 55% of domestic markets. And when we say we want to grow it to 60-65% of domestic market, do we expect our global market share also to increase? And what is the mode in the business? Yes.
If the domestic market share...
Yes.
Sorry, please continue. Ask your question.
What is the mode in the business that we expect our market share to increase?
So the moment our market share in the domestic tire industry grows, it will have impact on our global market share as well. So that is one thing. And the other thing is that we do expect to have a little more of the market, global market, than the growth. But I think the major growth in the market share globally would come from the domestic market, which is India being the fastest growing insoluble sulfur market in the world today.
So what I understand, post expansion of some of the players, including you, total supply is 357,000 tons. And what should be the approx demand?
Approx demand should be somewhere around 2.75 to 3 lakh tons.
And when do you expect this to match up?
We are expecting a 2 to 3% growth in demand annually.
Globally. Even for domestic, is it?
No, domestic would be higher. This is the annual global demand increase that we are anticipating.
So also, how do we see our volumes panning out since since US tariffs are there? So, and our 40% of our revenue comes from North America. So, are we seeing any subdued demand there, or the volumes are still stable?
First of all, let me correct you. 40% of our demand is not from America. Our supply is much less than that to America. If we look at it, about 50% of 45 to 50% is domestic, and rest of the thing is exported to various parts of the country, of the globe. Secondly, the duty has not affected our market share, though it has had an impact on our margins, which we hope is temporary. And once this whole tariff thing is sorted out, then our margins should also come back.
So can we quantify our America sales in terms of percentage of total revenue?
I don't think that will be possible for me to do that for competitive reasons.
Sir, also when we say we will gain market share in terms of domestic market, is it just because of the anti-dumping duty, or do we expect that we have some...
There are many factors. Anti-dumping duty, of course, is one major factor. We cannot deny that, but there are other factors in terms of our relationships and in terms of our offerings that we hope will give us more traction to regain our market share in the Indian market.
Sir, and any light on anti-dumping duty on Malaysia?
Sir, but I request you to rejoin the queue for follow-up question, as there are more participants left in the queue.
Sure, thank you.
Thank you. The next question is from the line of Mansi Joshi from SMIFS Limited. Please go ahead.
Hello. Thanks for the opportunity. So I was asking what sort of volume growth we are witnessing post the anti-dumping duties, and how's the import trend? Is there any country which imports have reduced materially?
See, the data that we have got till now is only till August, and some unconfirmed data from September. Though there has been some reduction, but it might be attributable to the fact that there were some increased imports in the month of May and June. before the imposition of anti-dumping duty. So to give you a clear answer, I have to see what is happening in October and November, and then I would be able to give you a clear answer as to how much the imports are coming down by. We do expect and we are seeing traction towards increase in our share in the domestic market, and we are sure that to that extent, of course, the import should come down. But what would be the exact, impact would be more quantifiable in the month of December once we have the numbers for October and November.
Also, one more thing we can say that if the raw material prices remain like they are and the prices from Malaysia and China remain how they are, it will warrant increased anti-dumping duty on China and fresh application on Malaysia as well for anti-dumping. We are exploring all of these things, and if the prices remain like they are, then Malaysia will become a fit case for anti-dumping duty.
Okay, got it. And just one more question. How the product mix stands today? Like the gross margins are flattish Q on Q. And is there any figure for gross and EBITDA margin?
Sorry, I did not understand your first question. Can you repeat that?
Yeah, so I was asking how is the product mix today?
Product mix in the sense?
So, like gross margins are flat on the quarter-on-quarter basis. So I just wanted to understand the product mix. Is there any change in the product mix, or is it similar to the...
We only have one product. Of course, we have different grades of that. That is insoluble sulfur. Yeah. And yes, we have sulfuric acid as well. If you look at the top line, the sulfuric acid top line is a little more this time than last year. But there is no change in product mix as far as insoluble sulfur is concerned. It's one product.
Okay. And is there any target EBITDA and gross margin for the future? Like you said, the margins will come back to normal, but are we expecting any certain figure or improvement in that also?
The problem is then very difficult to answer this question, considering the very fluid geopolitical and geoeconomical situation that we are in. What we can say is, yes, for example, we got an increase in sales price post anti-dumping duty, but at the same time, in this quarter, we are hit by the increase in sulfur prices, right, which are increasing again. So it's very difficult to answer that question as of now.
Okay. Thank you.
Thank you. The next question is from the line of Maitri Shah from Sapphire Capital. Please go ahead.
Yeah, hello, am I audible?
Yes, you are.
Yeah, so I have a few questions. Firstly, on your capacity utilization, could you mention how much utilization you had on the insoluble sulfur and also on sulfuric acid?
Insoluble sulfur is roughly 70%.
Mm-hmm.
And sulfuric acid is full capacity.
And full capacity, okay. Also, Q on Q, we saw a decrease in our EBITDA margin. So was this because of sulfuric acid prices going down, as we had indicated in the past call that the prices might go down because they were at quite a high price in last quarter? Is that the reason why our EBITDA margins were hit? Hello?
Just give me one moment.
Yes, sir.
I just want to double check what I'm saying. So there has been a slight decrease in sulfuric acid margins, yes. What has happened is that during the quarter, the sulfuric acid quantity has also come down because there was an annual shutdown, which was taken during the quarter. Yeah.
So there was a lower contribution to the top line from sulfuric acid. Is this why the margins are down?
Lower contribution because of the annual shutdown that happened during this quarter. That is one reason. And obviously, once the annual shutdown happens, then the repair cost also gets reflected in the cost.
Correct. Also, do we provide volume numbers for the quarter for insoluble and sulfuric acid? Is that possible? And also the margins for both of these businesses?
Sulfuric acid, we can provide you our capacity. We are last year we did about 99,000 ton, and this year also we are looking at a similar figure.
Okay. And what sort of margins do we earn on sulfuric acid? Because these are priced on sulfur plus prices. So since the sulfur prices
yes, you are right. More or less, normally it is on sulfur plus basis, but margins vary so widely that there is no set number that I can give you.
Any sort of range you can guide for sulfuric acid?
The range has been from 200 to 4,000 rupees.
That's in the EBITDA?
Sorry?
200 to 4,000 is the EBITDA range?
If I look at last 2 years, I have earned from 200 to 4,000 rupees over sulfur on sulfuric acid.
Okay. And what sort of margins do we have on the insoluble sulfur side?
Well, that is something which I cannot disclose exactly on a per ton basis. You can see my margin scenario and you can take it out from there.
Okay, because we had almost 4% decline in margins quarter on quarter. So I was just expecting what's the range for your guide for in our steady state basis.
I didn't get your question again.
So the EBITDA margins last quarter we had close to 21.7%.
Sorry, your voice is not clear. I heard EBITDA margin. After that, I heard your voice but couldn't make out the words.
Yeah, is this audible now?
It is audible, but can you speak a little slowly, please?
Yeah, sure. So our EBITDA margins last quarter were 21.7%, which is now down to 16.8%. So what sort of steady state rate can we expect the company to operate at?
See, last quarter it was 21.7%. This quarter they are lower because of sulfuric acid shutdown being there, the sulfuric acid repair cost being there, and there has been a mark to market. If you remember that the rupee was at its highest on 30th of September. So on all our forward covers, there was some mark-to-market loss, which was there. And if you look at the notes on my result, there is about 2 crore odd lakh rupees duty that I had to pay, stamp duty that I had to pay during this quarter, which is also sitting in the expenditure. So all these things combined has brought down the margins.
Okay. And any update on the Malaysia anti-duty?
Sorry to interrupt, ma'am, but I request you to rejoin the queue for follow-up questions.
Yes,
I think on the Malaysian anti-dumping duty, Mr. Akshat Goenka has already explained whatever strategy or whatever outlook is there. He has already explained that earlier on Malaysia anti-dumping duty.
Okay, yeah. Thank you.
Thank you. I request each participant to ask 2 questions only. The next question is from the line of Anubhav Mukherjee from Prescient Capital. Please go ahead.
Am I audible?
Yes, you are.
Yes, please continue.
Sir, in the domestic market, have we taken the full $250 or $300 per ton price hike already, or that was partially taken in this quarter? How is it?
So, a couple of things have happened. Firstly, we have not been able to take the entire $250 or $300 hike because Malaysian imports are coming in cheap. So the Malaysian imports are coming in cheap, and we are ultimately benchmarked to Malaysian imports. So that is the reason that we have not been able to get the full benefit. That is one. Secondly, the raw material prices have also gone up a lot, so it's not the benefits are not reflecting in the margins. So what anti-dumping duty has helped us to do is in effect maintain the margins in spite of the increase in raw material prices. Now two things are going to happen. One, we have to see how the raw material prices play out and how the competition, maintains its pricing. And second, of course, very extensive investigations are starting at our end and with the various people regarding whether Malaysia becomes a fit case now for anti-dumping.
So I just want to add here one thing, Akshat, that since the imposition of the duty, once we had initiated the anti-dumping duty on China, China had gone ahead and reduced their prices as well. So we could not get the full benefit because along with Malaysia, China had also reduced prices significantly, and that is one reason why we could not get the $300 increase, because we got the $300 increase from their current price, not from the price on which we had initiated the anti-dumping duty.
Okay. And sir,
what was the price at which we had initiated the anti-dumping duty? After that, the prices came down from China, and whatever increase we got is from that price, not from the initial price.
Get that. So for us, like compared to previous quarter, can you indicate like what sort of price hike you were able to take on our domestic sales?
See, these price hikes, again, I cannot indicate here because we have had price hikes from the tire customers, and you will understand that, we have negotiations with them. We cannot indicate a number. But yes, we did get a price hike on the existing thing, which was to the tune of our expectation. And as we have pointed out, it could not get reflected into our margins because of the raw material costs, which are high currently.
Great. And sir, now that we have initiated the anti-dumping duty for Malaysia, do we have a sense of...
So let me be very clear. We have not initiated any anti-dumping duty on Malaysia. What Akshat was saying, that with the cost structure prevalent now, it will be really difficult for other countries to sell at the prices that they are into India. But if that continues, then it becomes a fit case for initiation of anti-dumping investigation. That is what he has said.
Okay.
So let me clarify further. A certain time period of data is required before one can initiate anti-dumping against any country. In the case of Malaysia, if you look at the recent times, I don't want to specify a specific time here for obvious reasons, but if you look at the recent times, it is coming under a fit case of anti-dumping. Now, if this trend continues and until we get the requisite minimum number of months of data at this current trend, it will certainly become a case of anti-dumping. But because we have to take trailing data, earlier it was not a fit case of anti-dumping, but now it has totally become. So let them continue like this for another few months and we will be initiating it officially against them.
Great. And so for the US exports, what was the effective tariff rate that we had to pay, and did we bear the entire burden of that in our margins? Yeah.
So earlier the effective tariff rate was 0, now it is 50%. And we have had discussions with our customers, and it is not the entire burden that has come on us, but yes, it's a substantial part of it has come on us. So we have both very keenly tried to work out a solution where they can continue buying without taking a significant hit, and we can continue selling without making losses. So we have come into an arrangement where we continue to sell our products to US. We are hopeful, if you look at the statements coming out of the US government and the Indian government and the trend which is going around, that this should come to a resolution soon.
Get that. And sir, for the last quarter,
did sir, but I request you to rejoin.
Just a small follow-up. I was asking, did the 50%
sorry, sir, but we have
effective
a
rate
lot of more participants in the queue. Can you please...
let him do the follow-up.
Okay, sure.
My only follow-up was, sir, did the 50% rate come in force for the full quarter or
I can't hear. Sorry, I'm so sorry. I can't make out what you are saying, please.
Sir, I was asking the 50% tariff rate, did it come into full effect for the entire last quarter or
No. No. It's more into, because it was, that 50% was imposed in the month of September.
Okay.
Yeah.
Thanks. That's all.
Thank you. I request each participant to ask 2 questions only. The next question is from the line of Amar Kashyap from Algro. Please go ahead.
Hi. I hope I'm audible. Thank you for the opportunity. My question is regarding Malaysia. My understanding, please correct me if I'm wrong, is that in June 17th, Flexsys had announced a $250 price increase. But your comments today sound like that doesn't seem to have happened, or perhaps that they have reversed it at some point. Is this correct?
No, this is a very good point that you brought up. It is very correct that they had publicly announced a $250 price hike. And all I can say is that so far in the data that is not in the publicly available import data, that $250 is not visible.
Okay. Thank you very much.
That is what I
understood. Thank you. And if I can just take 1 minute to congratulate you and the team on an admirable performance, not just in this challenging quarter, but the last few years. I'm very hopeful about the future of this enterprise, and thank you all.
Thank you.
Thank you. The next question is from the line of Anupam Jain from Indra Securities. Please go ahead.
Sir, thanks for the opportunity. One question that I had was, so when I compare to your last quarter, I see 3.5% dip in your EBITDA margin. So there are several factors that you have said. One is sulfur pricing, another is geopolitical.
No, sulfur pricing, not, sorry. Because if you look at it from Q1, if you look at the...
Yes, you complete. Okay. Hello?
Yes, please do complete your question.
Okay. So there were reasons that this EBITDA margin increased. So what are the reasons that, if I will say USA, raw material, anti-dumping duty, pollution? So what are the factors that if you can contribute, if any by any estimate that you can contribute this number? Divided.
So first of all, let me clarify that if we are looking at Q1 and Q2 number, sulfur is not a factor if you compare Q1 to Q2. Sulfur, we are saying, is a factor as far as the anti-dumping duty absorption is concerned, and it is a factor in the current quarter. Number 2, I have already explained that one of the major reasons for the dip in the EBITDA, 2 reasons. One is sulfuric acid, which was under annual shutdown, one plant, and the other are the increase in fixed cost for 2-3 reasons, which I have already explained to you. Now, your third question was that going forward, how will the whole thing play out? Normally, if we look at it historically, these type of high sulfur prices are not sustainable. They do come down, and we hope that post Q3 they will come down, and that should be a positive for our EBITDA margins once they come down, because the price increases here are not related to the sulfur increase. The selling price. If Malaysia chooses to increase the price from January, that or even China because of sulfur or otherwise, that should also help us positively.
Okay. What will be your US revenue share and what will be this annual cost? What will be the loss of revenue that you had this quarter due to server plant shutdown?
I could not get your question. Your voice is missing in between.
Yeah, it is better now?
It is better, but in middle it goes away. Yeah, please.
Okay. So annual cost that the revenue loss that you had due to sulfur plant shutdown.
No, the sulfuric acid plant shutdown means that there is a tonnage loss, not on contribution, which will now be made up in this quarter. But in this quarter, contributions of sulfuric acid are expected to be low because traditionally November, the season around Diwali and December are low demand seasons. So sulfuric acid contribution are expected to be lower in this quarter.
Okay, and what is your revenue share from US?
I can't share the number, please. Because then the tonnage can be calculated. That is not something I can share.
Okay. And what will be the impact of raw material? If you can just compare it on a percentage-wise, this quarter that you had.
Let me put it this way. Normally, the sulfur, last year, if you look at the increase in cost of sulfur on sulfuric acid, from last year to this year, not on sulfuric acid, on insoluble sulfur, the increase merely on account of cost of sulfur for quarter ended September versus quarter ended September 24 is more than 10,000 rupees per ton.
Okay.
Yeah.
Okay. And
so we have increased my realizations have increased by more than 10,000 rupees. But out of that, 10,000 has been absorbed by increasing cost of sulfur only.
Okay. On financials, so your cash flow, your working capital increased basically 29 crore rupees in H1. What were the reasons for this?
Basically, 2-3 reasons that, ended September, we have got more market share in tire companies where our debtor outstanding is longer than spot market. So there has been a shift in our profile. We have been selling more in domestic than export. Again, that shift. So that means the number of outstanding days have gone up by 4-5 days. So that is what is being reflected as increase in debtors. Second is, of course, sulfuric acid, where the realizations have been higher, albeit at the same margin because of higher sulfur costs. And again, in acid, our share of the institutional sales have gone up vis-a-vis trade sales. In trade sales, we have no credit, but in institutional sales, we have to give credit. But that is important to us to maintain our market and stability in sales because of the high quantity that we are selling. So these are the two reasons because of which our sundry debtors have increased.
Okay.
Secondly, our advances have increased substantially in order to secure sulfur for this quarter on account of anticipated. Earlier, Naira is not supplying sulfur because of the issues that it is having in sufficient quantities. And secondly, this is sugar season now, where there is a paucity of sulfur, and one of the major refineries is going in a shutdown for 50 days. So looking at all those things, we have to secure sulfur, and for which advances have to be given. So these are the 2-3 reasons because of which this is showing a little higher.
Okay. So when you said there is 2 channels that you distribute your sales with, one is institutional and one is trade channel, because what I understood was direct B2B relationship.
This is for sulfuric acid. I'm talking about sulfuric acid.
Okay.
So the first part I said more sales to tire companies is the insoluble sulfur part, and the second part is sulfuric acid.
Okay. And this 7 crore rupees was maintenance capex?
Yes.
And what is the cost of borrowing? Okay. And what is the cost of borrowing?
We have not taken any term loans for these capexes.
No. So working capital. You have a working capital loan.
Working capital depends. If it's mostly it is PCFC or foreign bill discounting where the cost is around 4.5%. For CC it would be nearly 9%.
Okay. Thank you. That will be all from me.
Thank you. We will take that as the last question for today. I now hand the conference over to the management for closing comments.
I'd like to thank everyone for being part of this call. We hope we've answered your questions. If you need more information, please feel free to contact us or Mr. Devin Dhruva from SGA, our Investor Relation Advisor. Thank you.
On behalf of OCCL Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your line.